So there's a bit of a common misconception that you need a lot of money to start investing or you need a lot of money to start building wealth. But the great news is there's actually so many beginner-friendly ways you can start investing and putting your money to work, so you don't have to worry about, not having tens of thousands of dollars to get started. So in this video, I'm covering 5 different ways you can start investing with $1,000 or even less. You can even get started with some of the ideas in this video with just $10, so anybody can start investing. And at the end of the video, I'm going to be covering some of the most important considerations you should make when deciding how to invest your $1,000, so you're going to want to watch until the end. Let's get to it. All right, so number 1 on this list of ways you can invest $1,000 is to invest in real estate. I know it might sound surprising because a lot of people think you need, to be a millionaire to have tons of money to invest in real estate, but you can actually start investing in real estate with just $10 thanks to real estate crowdfunding companies. So like the name suggests, real estate crowdfunding companies pool money together, so they crowdfund from a bunch of different investors and then acquire income generating properties. So usually these crowdfunding platforms purchase things like commercial real estate, they'll buy like office buildings that they rent out, or they'll purchase multifamily homes where they generate a lot of rental income. And as a shareholder in these properties, you can then earn income in 2 ways. The first is through dividend payments, so a lot of these crowdfunding platforms will pay you with quarterly or annual dividends. And the second way you can potentially generate income is through appreciation. So you buy some shares in different real estate properties, and over time, if the property appreciates, you can gain value that way. Now, real estate crowdfunding sites are really a dime a dozen these days, and some specialize in equity investments, some specialize in debt, some are only open to accredited investors, others are more beginner friendly, so not all of them let you start investing with just $1,000. But one platform that does is called Fundrise, and it actually lets you start investing with just $10. And so Fundrise has a variety of e-REITs that you can invest in, or different funds, and it pays investors quarterly dividends and charges a 1% annual management fee. Now, historically, Fundrise has returned about 8 to 9% annually, and we like it at Investor Junkie because of that $10 requirement and the fact that it only charges 1%, which is on the lower side for real estate crowdfunding. There's also a secondary marketplace where you can sell your shares if you decide you want to exit, although know that if you sell before 5 years, you pay a 1% penalty, so liquidity is kind of there, but it's not guaranteed, and you can pay some penalties. But the bottom line is companies like Fundrise are a very beginner-friendly way to add real estate to your portfolio, and you can start investing today with $1,000 or less. All right, and another straightforward solution you can use to invest $1,000 is to invest in various stocks or ETFs. And so what we like about this process at Investor Junkie is it's honestly very simple to get started. I mean, you can go to any commission-free broker these days, any online broker with a brokerage account your bank might offer, open an account and begin investing. And so really your first decision is going to be the type of investment account you want to open. So for example, you can open a taxable individual account and just start investing there, or you can consider some accounts that have tax advantages like a traditional or Roth IRA. If you're trying to maximize your tax benefits and are thinking about investing for retirement, an IRA isn't a bad place to start. So with traditional IRAs, you deduct contributions now and then pay taxes when you actually withdraw the money later on. But with a Roth IRA, you pay the taxes and contributions now and then get tax-free withdrawals later on, so they're kind of the opposite of one another. But in any case, you can open your taxable account, you can open an IRA of some sort, and then your next decision is really what are you going to invest in? And so this is where it's a really good time to think about your risk tolerance and goals, and also how much effort you want to kind of put into all of this. Like, do you want to spend time researching companies and stocks or ETFs that you think are good buys? Or do you kind of prefer the passive style of just, buying a bunch of index funds, dollar cost averaging your way into the market and kind of forgetting about it? So personally, I'm more of that passive style. I'm not really researching individual companies. I just buy a bunch of index funds these days. It's up to you how you want to invest. We have a lot of great content on investorjunkie.com about, how to get involved in the stock market or how to invest in ETFs. So I'm going to be linking our investing guide for stocks down below that you can check out. And of course, you can always speak to a financial planner or advisor about this kind of thing to build a portfolio that's right for you. All right, and the third way you can start investing with $1,000 or less is to use a robo-advisor. And so I know I just mentioned this kind of active versus passive style of investing, and if you're leaning towards the passive side, a robo-advisor is one of the best options you can use. So robo-advisors work by building a portfolio that matches your risk tolerance and goals. So when you sign up for a robo-advisor, you usually answer a questionnaire about, what your goals are, how risky you want to be, why you're investing in the first place, and it then builds a portfolio that's right for you. So typically robo-advisors build portfolios of low fee ETFs and bonds. And so this is really nice because it keeps the actual fees of the things you're investing in quite low. And again, these robo-advisors can actually pick different assets that match your risk tolerance and goals. And another advantage of robo-advisors is that they typically charge low management fees overall. Betterment and Wealthfront, two of the leading robo-advisors out there, are a perfect example. they both start at just 0.25% in annual management fees. And so for $1,000, this is $2.50 per year in management fees. Like, this is a cup of coffee we're talking about here for a robo-advisor to manage your investments for you. And another advantage of robo-advisors that people really like is that they handle things like automatic portfolio rebalancing. So over time, as you know, your asset allocation might change, they can sell off different assets, purchase different ones, and keep that overall composition pretty similar to when you started. So we really like Betterment at Investor Junkie because it has a $0 funding requirement, really low fees, and it has some great ESG investing options as well. So you can invest in portfolios that value the environment or, social well-being. We also really like Wealthfront. It has a $500 funding requirement, so still fits within that $1,000 range, very low fees like Betterment, and it also gives you a few more customization options so you can kind of tailor the portfolios a little bit more. In any case, we have a lot of robo-advisor content on investorjunkie.com as well, and Betterment and Wealthfront are definitely two great spots to begin your research. All right, and the fourth idea on this list of ways you can invest $1,000 or less is to look into fixed income investments. And so really the idea here is just to take your $1,000 and to park it somewhere where it's going to still be accessible to you somewhat, but it's going to generate a little bit of income at pretty much low or no risk. And so this is really a decent idea if you're investing for the short term. So maybe you want to put $1,000 to work, but you need it in 6 months to buy a car, or maybe you're gonna, lock it up for a year, but after that you plan on spending the money on something. So bonds are really a popular fixed income idea you can explore, but if you're gonna look into bonds right now, we recommend checking out iBonds because they are kind of an inflation-proof and inflation-protected investment. So you can still generate really good returns right now with iBonds, and your money's not losing value to inflation. You can also consider things like certificates of deposits, or CDs as you'll see them referenced, or money market accounts. So again, somewhere you can kind of deposit your money for a certain amount of time, generate a bit of interest, and then the money's there down the line when you need it. Just note that with CDs, you often have to lock into a certain fixed term. This can be 6 months or a year, but it's not quite as flexible as just, keeping the money in your bank account. And finally, you could consider something like a good old-fashioned high yield savings account. Again, this isn't usually going to outpace returns you might get in the stock market or real estate traditionally, but it's somewhere flexible. You can park a little bit of cash if you're kind of figuring out what you want to do. And the great news is that a lot of mobile banks these days have actually raised interest rates, so you can actually get APYs of like 5% with companies like Aspiration. You can get 5% at Varo right now, so there are a lot of great high yield savings accounts out there as well that you can explore. All right, and the fifth and final way you can invest $1,000 is to build an emergency fund. And while this isn't a traditional investment idea, if you don't currently have an emergency fund, $1,000 into your emergency fund is one of the best investments you can make. So like the name suggests, an emergency fund is there to cover emergencies. This could be your car breaking down, your water heater going bust, or something, coming into your life that needs money to fix. And so the main advantage of an emergency fund is that it lets you avoid borrowing money to fix problems. So you don't have to turn to your credit card or a personal loan. You kind of have this little slush fund on the side for when disaster strikes. And so typically financial experts recommend having 3 to 6 months of your monthly expenses saved up on the side just to cover emergencies. And really a high yield savings account is a perfect place you can park your emergency fund. The money's there when you need it, so you can withdraw it if you need to cover an emergency, but it's still gonna earn some interest while it sits there. And honestly, $1,000 is a great start for an emergency fund. And if you don't have one built up right now, or if it takes you several months to build your emergency fund, don't stress or don't feel too bad. The important part is to slowly chip away at this until you have, 3 to 6 months kind of saved up for a rainy day. Even moving a little bit of money aside from each paycheck into your emergency fund will add up quickly, and might surprise you how fast it adds up. So definitely get on top of building an emergency fund if you don't have one yet. All right, so that does it for our 5 favorite ways you can start investing with $1,000 or less. And now really quickly before wrapping up the video, I just wanted to cover a few important considerations you might want to think about before you actually deploy your money. And so the first would be your investing time frame. And I mentioned this a couple times throughout the video, but you really have to decide this $1,000 you're investing, do you need that money back in the short term, or is this something you're investing for retirement or for the long term? Ideas like the stock market or ETFs or real estate are typically a bit better long-term investments, whereas short-term investments, you usually want to stick with something a little bit safer, like fixed income investments or something like that. And the second consideration you really need to think about is your overall risk tolerance. So how much risk and volatility are you willing to stomach? And again, this really ties into that first idea of your investing time frame, because typically for shorter term investments, you want less risk because you want to make sure your money's actually there when you need it. Robo-advisors are honestly a really great resource here because they help you build portfolios that match that risk tolerance. Of course, you could do this on your own through DIY investing, but it is something really important you should think about. And the third consideration, I also mentioned it a lot in this video, is that passive versus active investing style. So again, robo-advisors, awesome for passive investors if you just want to put money into the market and, portfolio and don't really think about it. You can go down the DIY route if you want to be more active. Ultimately, the choice is up to you. There's no right or wrong answer, but it's important to think about what style suits you. Anyways, guys, that does it for our 5 favorite ways to invest $1,000 or less and some of the most important considerations you should make. If there's an idea that I missed or if there's one that stands out to you, definitely let us know down in the comments below. This has been Tom Blake with InvestorJunkie.com. Thank you guys so much for watching. And as always, don't forget to check out our website for more great investing advice and resources.